A big win for Labour in Great Britain. The Biden presidency hangs in the balance, and France heads into the second round of elections. This is Bloomberg Wall Street Week. I'm David Weston. This week, Ken Jacobs of Lazard explains why the Supreme Court decisions this term may not be as good for business as many people think.
We shouldn't suddenly cheer this decision as pro-business.
And as the United States celebrates its Independence Day, the former head of Young and Rubicam tells the story of how he went from a boy in a labor camp in communist Romania to rise to the top of the advertising business.
These idealistic views of America meant so much to me.
We start with U.S. jobs numbers that came out on Friday and what they tell us about the U.S. economy with Stephanie Flanders, Bloomberg's Senior Executive Editor for Economics and Government. So, Stephanie, thanks so much for being back with us. So it's an interesting set of jobs numbers. On one hand, they increased the non-farm payrolls by a goodly amount, but they also took revisions, taking them back down. So on net, what did we learn?
You know, I think we learned quite a lot from this, and I think one of it was that actually something that our chief economist Anna Wong has been talking about for a while is that there had been that the rate of job growth that we'd seen actually for the last year or so was being exaggerated by the way that the Bureau of Labour Statistics is including those business failures and successes in their numbers. So she had estimated already that instead of the sort of 200,000 jobs additions every month that we've seen on average for some time now, it was actually going to be revised to half of that figure, more like 100,000, when you took business failures into account. And we haven't fully seen that revision yet, but I think that was one thing that certainly the bond market investors were focusing on in these numbers, that you had some big downward revisions in the past numbers. So even though the headline was pretty close to what we had forecast, but there was a bit lower than expected by others, even though that headline looked healthy, I think we are starting to see that deterioration under the surface, which was emphasised also by the increase in the unemployment rate, which was higher than expected. So I think all of that points to a more significant weakening, or a more advanced weakening in the labour market than perhaps many had thought.
Yeah, and that halving is terribly important, as I understand it. Economists tell us that basically to sort of replicate the number of jobs you have now, it's around 100,000 a month. So if it's 200,000, that's really a growing job market. If it's 100,000, that's a lot closer to just break even flat.
Yeah, and obviously, you know, we haven't seen the recession that the Bloomberg Economics had expected, and it's definitely been a stronger economy than we expected, you know, even 6 to 9 months ago. But the sort of beneath the surface weakening, and again pointing to that rising unemployment rate, I think all points us still towards rate cuts in September, and then maybe another one before the end of the year. I guess, you know, that's if we were in normal times. But of course, you know, there's a few other things going on in the next 6 months, and those are things that the bond market and indeed the Federal Reserve are going to have to pay some attention to as well.
Well, let's talk about exactly that, Stephanie, because as you point out, there's sort of a push and pull going on here. On the one hand, there seems to be a slowing job market, and as you say, the unemployment rate is ticking up slowly, which might indicate we really have to back off on the fiscal policy. On the other hand, we do have this little election coming up in November, and there have been some substantial developments this week on that, particularly about who the nominee is going to be for the Democrats, as President Biden is really going through a tough time. We've seen some reaction from the bond markets to that phenomenon.
Yeah, a lot of talk about the Trump trade, and I think we saw that particularly in the immediate aftermath of that disastrous debate performance a week ago by President Biden. You know, we had perhaps been in a situation where many in the markets, and certainly in the betting markets, thought it was more likely than not that President Trump would come into office in the November elections. But we sort of went from more likely than not to an apparently unstoppable over the last week or so, as a course of not just that just deteriorating sort of prospects potentially for President Biden on the back of that performance, But a lot of people, certainly a lot of people sitting in congressional seats and senators thinking on the Democrat side, wow, those not only is we not going to have coattails coming from an incoming, re-elected president, we could seriously be in trouble, and we could be looking at a clean sweep for the Republicans come November. If any of that does come to pass, then I think people are looking down the track and saying, OK, that's going to mean more unsustainable fiscal policies, and probably maybe good for the economy, sort of short term in terms of growth, but it certainly points to higher interest rates for longer on the long end, on the bond yield end.
Yeah, this is a terribly important point. I'm curious about your perspective, not only from your time in London, also you spent some time in Washington in the administration, actually. You've been watching this for some time. Do the markets basically favor a divided government in the United States? That is to say, they don't like it when it's all Democrats or all Republicans in both houses of Congress plus the presidency, because a lot more can be done.
I think there is a nervousness around that, and thank you for reminding me, David, that actually the last time when I was in the Treasury, unfortunately I only had a junior job, but when I was in the US Treasury was the last time we had a budget surplus in the US on the federal side. It's been a very long time since we had one of those. But I think it's also, there's a Trump-specific factor here, right? That he's talking about across-the-board tariffs that would add to inflation at a time when, yes, you're going to also have increased defense spending, and we're already in an economy, this is an economy that is probably, potentially at the peak of the cycle, certainly at close to full capacity, that's been running at 6 or 7% of GDP budget deficits year after year. And if that's only going to go up, or at least stay at that level, as the cost of servicing that debt goes up, that is looking very unsustainable. And I guess the key question is, even if you have a strong equity market in that context, you're certainly going to have a sort of longer-term sell-off on the bond market, and you're going to have trouble for the Fed, potentially pressure on the dollar, but way down the road.
So, Stephen, I'm so glad you brought up the equity markets as opposed to the bond markets. I mean, riddle me this, if you will. The bond markets are showing some nervousness now about where we're going in terms of deficits and inflation going forward. And yet, the equity markets in the United States continue to march higher. Are the equity markets, to some extent, divorced from the real economy, the underlying fundamentals here?
I think it's more that you're looking at, you certainly, if you look at a very unsustainable boom in the US, well, an unsustainable boom is probably going to be quite good for equities for a significant period of time. So I don't think, and there is kind of a tradition when you have that kind of unsustainable mix, and often also with Republican governments coming in, good for equities, but if they're borrowing a lot, it might be bad for bonds. So I don't think there's too much of a riddle there. But I think in the context of the big surplus economies that used to just plow a lot of money into treasuries, not being so keen to acquire treasuries. We're not just talking about China, we're talking about in the Gulf as well, a bit more nervous about going into treasuries, and the role of the dollar maybe declining a bit at the margins. Then that does, I think, that sort of twin deficit scenario and an sort of runaway growth with potentially inflation problems, I think there could be question marks about the dollar.
Stephanie Flanders will stay with us as we turn to two momentous elections on her side of the Atlantic. Labour's landslide win on Thursday and the second and final round of French parliamentary elections still to come. That's next on Wall Street Week on Bloomberg. This is Wall Street Week. I'm David Weston. Our Bloomberg colleague Stephanie Flanders has stayed with us for an early read on what the change at number 10 Downing Street could mean for the British economy. So, okay, it's in the books now, Stephanie. I think it's fair to say a landslide win for Sir Keir Starmer and the Labour Party. What do we think that may mean for economic policy going forward, if anything?
Well, we do have a first female Chancellor of the Exchequer, almost certainly, a woman called Rachel Reeves, who we're going to get to know. She is actually a former Bank of England economist and is considered to be very by the book, quite orthodox in her approach to economics. So at some level, this is certainly not a Corbyn, a Jeremy Corbyn style incoming Labour government, very more in the tradition of Blair. And that's what Keir Starmer has done with the Labour Party, is managed to sort of drag it back from that fringe period under Jeremy Corbyn and make it an electable alternative to the Conservatives. And boy, the voters really wanted an alternative to the Conservatives. They gave them an absolute kicking in this election. Didn't really plant a lot more votes for Labour, but had a half of the votes for the Conservatives. The focus is going to be on growth. I think the big difference, if there is one, will be potentially the approach to Europe and the rigorous focus on house building and investment. You know, that is something where the previous government had not wanted to, you know, you get a lot of arguments from people, oh, I don't want to have that wind farm on my ground, you know, near me, I don't like it, I don't want to have this new housing estate near me. They have promised that they're going to push through that opposition, but I guess we'll wait and see.
Well, they've promised they're going to push through that. At the same time, as I understand, they've largely promised they're not going to increase taxes, at least in the vast majority of areas. So when you talk about the new Chancellor of the Exchequer, it's her job now to come up with the money for that investment. Where's that money going to come from?
Well, so her answer to that is faster growth. But of course, you know, you have a chicken and egg problem. So if the UK had just grown at its long-term average rate after the global financial crisis, after 2008, the economy would be 40% larger now, and there would be a lot more tax revenues to fund a lot more of the demand for public services that is undeniably there in the UK, pent-up demand. We've had much weaker growth than that. And it's hard to sort of immediately turn on the switch. But I think she will be looking for ways to get credit from the independent fiscal watchdog for things that she's doing now affecting growth over the longer term. So if she does things that really convince that watchdog, oh, actually growth could be a little bit higher over the next few years, well, potential growth is going to go up, well, that will also actually give her a bit more room on the spending side because it'll look more sustainable over time.
So, Stephanie, when you talk about the actual growth versus the potential growth for the British economy, some of us might think a question about Brexit and what effect it had on that differential. At the same time, I don't recall a lot of discussion of Brexit at all in this election. It doesn't sound like Sir Keir Starmer is going to be saying, let's get back into the European Union. So how are they going to bring back the actual growth without addressing the Brexit issues?
You know, I think it's been a controversial question, and there's been a lot of pressure. When you look at polls, there is a large majority now, especially of many Labour voters, wanting to potentially even go back in the EU, which I don't think is a practical suggestion, but certainly to have a closer relationship, maybe in the single market, join the customs union. He has ruled all of that out and has not wanted to talk about it. When we saw the results last night, we saw a little bit of why, because the second place party in a lot of the seats that Labour was winning back were not the Conservatives, but the Reform Party, which, as you'll remember, David, is a kind of anti-Europe, anti-immigrant party that's the sort of remainder of the big campaigners for Brexit. So there's still quite many of the people who voted for Brexit, working class voters in northern constituencies, old industrial constituencies, they are still feeling aggrieved about Brexit, and I don't think Labour wants to go near it. They do want to unlock sort of smaller deals that will reduce some of these obstacles, the red tape, which you're absolutely right, has hit growth. And I think even that could have an impact. If they make it easier for importers and exporters who are now facing a lot more red tape, even without changing anything else, that could help trade at the margin and help growth.
So, Stephanie, let me push you here a little bit, because we have two big elections. We've just had the UK elections. Now we're about to have the second and final round of the parliamentary elections in France, which seems to be a quite different story, where actually you have, one would anticipate, substantially to the right candidate in Marine Le Pen, who looks like she'll do reasonably well there. The one constant seems to be anti-incumbent, but is there any through line through those two elections?
I think you've hit it, David. I'm on a bit of an election road trip at the moment, because I'm going to be going off to Paris and on Sunday to see those final results for myself. It's been quite the week, but it does look as though Marine Le Pen's party Rassemblement National is not going to win a majority, in part because they've been able to do the centre, which is very weak. Macron's party have been able to do some deals on the sort of case-by-case basis with the left, who are way to the left of, certainly, of the Labour Party in the UK. But I think the broader point, the death of the centre in France and in quite a few European countries, still stands. And I would say, you have Keir Starmer's now going to go off to the NATO summit. He's going to be the only leader there, really, around the table who has a spring in his step, who's not not a lame duck or is not looking weak. And he's going to look out of step because everywhere else, the kind of technocratic, middle of the road, we're going to get things done by the traditional rules, by looking at the facts. That approach is not faring well in other parts of the world.
Are we also seeing overall a trend away from bilateral and multilateral agreements? We had such a long period of time where we were basically taking down barriers to trade and investment things, but a lot of these parties seem to be much more insular.
I think that's right. I mean, it's certainly true of the US, and then others are taking their cue from the US, but can't quite follow, obviously don't have the capacity, don't have the size of market to declare that they're going to be, put their own country first.
Stephanie, it's always such a treat to have you on Wall Street Week. Thank you so much. That's Stephanie Flanders. She's Bloomberg's Senior Executive Editor for Economics and Government. Coming up, the Supreme Court thought it was helping business when it overruled Chevron, but was it right? We talk with Kenneth Jacobs of Lazard. That's next on Wall Street Week on Bloomberg. This is Wall Street Week. I'm David Weston. Everyone is talking about the Supreme Court decision this week on presidential immunity. But for the business community, the more important ruling may have been the one a week ago that overturned the Chevron doctrine. To take us through what that may mean, we welcome back now Ken Jacobs. He is Executive Chairman of Lazard. So, Ken, welcome back. Almost 2 years exactly since we talked about this subject. You were ahead of your time on Chevron. Take us through exactly what the risks of overturning Chevron really are.
Sure. The potential exists, contrary to conventional wisdom, that Chevron turns out to be anti-business. I think the knee-jerk reaction, the immediate reaction is that Chevron is a pro-business decision.
Because courts can overturn
more than that. If you step back and you think about it, the U.S. has three competitive advantages that have endured for the last 150, 200 years. It has rule of law, it has actually favorable demographics, and it has one unified market. The risk in Chevron is twofold. First, around unified market. Unified market means that when you have a product and you want to go to market, you've got a market of 330 million people, second only to China, with effectively one set of rules, with the exception of 2 or 3 industries, financial services, utilities, healthcare services. With the exception of those industries, you essentially have one market, 330 million people, one set of rules. As a startup company and an innovator, that's phenomenal. That's why this company attracts entrepreneurs, innovators like no other country does in the world. The risk on Chevron is really twofold. One is that you end up with uncertainty related to the fact that there's just going to be a lot more litigation. This opens up the possibility of being much more litigation. So it creates unpredictability and uncertainty about what the rules really are and what they will really be. The second risk is around the fact that there just may not be as much rulemaking at the federal level for good reason. It's going to be more likely it'll be overturned or litigated in court. But what that means is there's a vacuum, and nature abhors vacuums, and that tends to then end up being regulated at a state level. And the risk of all this is you end up with a market that was unified, fragmenting into ideological, partisan and parochial interests. Now, I'm not suggesting that's taking place overnight, and I think there are also some protections in place where that may not happen, but we shouldn't suddenly cheer this decision as pro-business. It has a real risk of being the opposite.
So, Ken, you've spent a distinguished career advising clients, thinking about doing M&A and things like that. What does it do to you as an advisor when a company comes to you and says, do I buy it, do I not buy it? Do I do this deal, not do this deal? What does it do if you're not exactly sure what the rules are?
Well, let's use real practical examples. You have a choice. You can buy a company in Europe that is primarily a European company, young company, going to start up in Europe, its operations, or you can plant yourself or buy a company in the United States. Buying, if you think about a young company in the United States, you've got a market of 330 million people. Accessing the market is easy. In Europe, the EU is better than what existed before, but it's much more complex. You have rulemaking at the top level, but you still have enormous authority in the role of countries. So that market isn't as unified as the U.S., and as an innovator, you would always choose to be in the U.S. And as a company, if you're buying an innovator, the same thing.
Also, let's talk about the litigation costs, because as you said, it looks like right now there'll be a big incentive for a lot of people to challenge rules. A lot of lawyers' money being generated. I'm not against that. I'm a lawyer. It's all fine. But what are the litigation costs, the friction costs that are being generated for this?
Well, first, it just creates unpredictability. When you have decisions made by experts, which is for better or worse, what we're dealing with a lot of the time in agencies, I don't mean for worse, but most of the agencies are peopled by civil servants who are really expert in their field. And when you have experts, you usually can predict what experts are going to do. I mean, yes, there's a lot of regulation that isn't perfect, but you can generally guess what they're going to do. When it comes to courts, it's very different. You have ideology that gets involved. We can see that in some of the decisions coming out of Texas on abortion rights. We have deep social beliefs in the same way. You have people's different views of the economy. Many of these trials could end up in the hands of juries, which become less predictable. So I think that's the real risk, is you go from something that is not perfect, really is not perfect. Our regulatory regime is not perfect at the federal level, but generally speaking, it's the same everywhere, and it's more predictable than it's likely to be under this new regime.
So you have the Chevron decision, which was one of them, which really overturned the rule that regulatory agencies we defer to in the courts. Their interpretation. And that's not the only decision that came out this term.
No.
We also had the administrative law judge decision out of the SEC that you have to be able to go to court under the 7th Amendment if it's going to be money damages. We even had the statute of limitations decision involving the Federal Reserve. Is this a pro-business court, Supreme Court?
I think this is a pro-court court. That's how I would describe it, because I'm not sure these decisions turn out to be pro-business if you go from predictable to unpredictable. And I think the key to business is predictability. That is, uncertainty is the curse of business and the curse of markets. And you only really know that when things are really uncertain. That's when you crave the predictability. So I don't think we're going to see this overnight. But no, I don't think this is necessarily pro-business. It may in the beginning feel like it is, but I think the real risk is the predictability issue. I think this is very pro-courts. I think we're going to see a lot more litigation, a lot more intervention by courts and decisions, which in the past sort of happened.
As a business leader, how confident are you that the Supreme Court understands the ramifications in the real world of what they're deciding?
Look, I have huge respect for the people that are on the Supreme Court. I mean, these are all enormously accomplished people. And when you actually sit down and you read these decisions, I'm not a lawyer, they're impressive writing, and they're very well argued and such. I think the risk at the Supreme Court, and I think generally if more power is going to the judiciary, is that I don't think any of these judges have really ever managed a company. They've never had to deal with a budget. They've never had to deal with a workforce. They've never had to deal with a board of directors or with shareholders. And so I think there's a little bit of ideology naivete at work here about not being in the real world. Now, maybe that's a curse of our system. That is, it's next to impossible. I think it's something you and I talked about before, where it's next to impossible to get confirmed by a Congress if you have a record. But I think that's the real risk here.
So let me add one other element to this, and this is politics. And I'm not asking who you're for or against in the election. I wouldn't expect you to take a position. But Donald Trump, when he was there the first time, made a big thing out of deregulation. He said he's going to really pursue that even more aggressive this time. Put a deregulatory presidency on top of what we're seeing out of the courts right now. What do you get?
Well, the irony of the Chevron decision is that when it would first implemented in 1984, it was hailed by conservatives as the best thing that could have happened for deregulation. And it was challenged by the liberal establishment as the death of government being able to do anything. Ironically, it's the reverse now. I think, I'm sure a Republican administration will probably take a tack that takes and it makes an effort to deregulate, reduce regulations and such. But the risk is that states step in and do something that the federal government is not doing. And when that starts to happen, you start to see the economy fragment, and you go back to what I said before about this, huge competitive advantage the U.S. has with one market. And you only have to look at the three industries which are primarily regulated at the state level, and you see that on a global level, those are the three least competitive industries we have in the United States.
Ken, it's always great to have you with us. Thank you so very much. That is Ken Jacobs of Lazard. Coming up, former Young and Rubicam head Peter Georgescu on American capitalism through the eyes of a young boy fleeing communist Romania in the 1950s. That's next on Wall Street Week on Bloomberg. This is Wall Street Week. I'm David Weston. This week, the United States celebrated its Independence Day, and Wall Street Week traveled across town to talk with one of the many who immigrated to America and helped Wall Street and the country become what it is today. We are here at the Museum of the City of New York, where a lot of the history of New York City is portrayed, and we are joined by Peter Georgescu, former head of Young and Rubicam, who himself is part of that history. So, Peter, it's great to be with you.
David, what a thrill. Delighted to be with you.
So take us back to when you came to New York and made some history in 1954.
Oh, my goodness. Well, my story starts thousands of miles from here in Romania. Born of Romanian parents, just at the eve of the Second World War. So my parents smelled that it was going to be trouble in the capital, so they shipped my brother, 5 years old, and I to Transylvania with my mother's parents, aging grandparents, wonderful people. And so the Second World War was with my grandparents in Romania. And we survived the war. And it wasn't pleasant, but it wasn't horrific. And so my father, unfortunately, was put in prison by the Germans because he worked for an American company, Exxon, and in the oil fields. And Germans, of course, took an ally guy and threw him into prison. They almost killed him, but then the president of Romania decided that he better get some friends on the other side. What if the Germans don't win the war? So he literally faced the firing squad, and they gave him a last-minute reprieve. Close. But anyway, he worked for they didn't know that, he worked for the OSS from prison. That's another story. So we reunited as a family in '46 in Romania. My brother, the organic family. I learned how to bike from my father. And that was actually the longest time, a year, that I've ever spent with my parents. What happened was, at the beginning of '49, in January, my mother and father came to New York for a general managers meeting at 30 Rock here in New York City.
For Exxon?
For Exxon, worldwide managers meeting. It was at that time that the communists took over Romania. The Iron Curtain comes down. And little old me, at that time was just over 7 years old, was there at the birth of communism. One of the most powerful autocracy that the world has ever seen. And Romania was an ugly one. It has a reputation that it was not so bad. It was the worst. 300,000 people were killed. And so then shortly thereafter, they arrested my brother, myself, and my grandmother. We were thrown close to the Russian border in a small town called Boloshani. And that's how we see the beginnings of what do you do. People are fungible. Do you use people to do things? And I was a witness to what I later learned to understand was totalitarianism, autocracy. And we were pawns. I never knew why they kept us alive. But we became pawns, as I'll mention in a minute. But anyway, in this little town, we got up at 6 o'clock in the morning, went to work 6 days a week, 10 hours a day. Sundays you slept.
And you were how old?
And I was 10 years old. No books, no learning, no nothing. You went to work 6 days a week, you slept on Sundays. That was life. And there was no hope. There was no discussion between us, my brother and I, about, hey, how's it going to be when we grow old, or when we grow up, or nothing. And then in New York, they tried to get my father to spy for them. And that's why they had kept us alive, to be the bait. Want to see your children alive again? You're going to spy for us. My father went home from the office where he met with this guy, and my mother and he talked. The next morning, he went to the FBI and said, this is what happened, what do I do? They say, become a double agent. My father said, I've seen that play, it doesn't work well. Sooner or later, they'll kill the kids anyway. What do we do? Eventually, they said, go public. The Russians wanted the world to think that communism is friendly and nice and warm and fuzzy. And so maybe they'll tell the Romanians they can kill the kids. So that's what they did. Every little town in America had a story of the blackmail of parents about their kids in Romania. a wonderful woman from Ohio, Frances Payne Bolton. She took over her husband's seat. She was the only woman in Congress. Not only that, she was head of the Congressional Foreign Relations Committee in Congress. She had met Stalin. She knew this story. Calls out my father, said, I'll get you boys out of Romania. Not a long story, but at the end of the day, she calls her friend Eisenhower, whom she helped elect as president. So she had some chits on Ike. We got traded for a bunch of Russian spies.
So the President of the United States intervened on
Yes.
your behalf to get you out of Romania.
And so he did. And I always wanted to know, why did Frances Bolton do that? Called my dad and then did it. People in my life, many people are my guardian angels. I have a Hall of Fame of guardian angels. It's long. I am who I am importantly because I got a lot of help along the way. And it was a different time. And, you know, America was a different country. There was compassion, there was caring, there was support. When I landed at Idlewild, it was awesome. You know, I've never seen, I mean, we got off the plane and there were the cameras, there were hundreds of reporters and television people and all the rest of it. And I didn't have a tie. And so they asked me, one of the reporters said, you're not wearing a tie. He said, well, what is a tie? I didn't know what the hell it was about. I got over 1,000 ties in the mail. This is America. People cared. People understood. The principal of Exeter Academy in New Hampshire, a damn good high school, called down my father, I'll keep a place for your son. My parents, I mean, I can't imagine my mother now thinking back after 8 years of being separated from her children. She agrees to have the baby, but I was not a baby. I was a man by then after what I went through. There I was in high school. I went there as a sophomore because the principal asked me, what grade did I want to be in? I didn't know what grade meant. I said, I want to be with boys my own age. That's the only thing that came to my mind. He said, threw up his hand and said, what difference? You will be a sophomore. So I went to Exeter for 3 years. Then I was fine. I got into Princeton.
Well, Princeton and
Stanford Business School,
than
blah,
fine.
blah, blah. And the rest of the story is an American story. It's kind of an educated American story.
When we come back, we continue our conversation with Peter Georgescu about his rise to the top of Young and Rubicam, the opportunities he had, and whether he sees the same opportunities for those starting out today. That's next on Wall Street Week on Bloomberg. This is Wall Street Week. I'm David Weston. Peter Georgescu fled communist Romania and climbed to the top of the advertising industry in New York. We talked with him about the opportunities he enjoyed, the strengths of the capitalist system he helped drive, and what has changed over the course of his career.
I apprenticed in the research department at Young and Rubicam, and I ended up running the company. I was the first non-American around me CEO to do that, to be CEO in America. They were not. The immigrants never got to run things in those days.
The contrast between the system in Romania you came from and the one you found in 1954 in the United States could not have been more overwhelming.
It was a stunner. That was the biggest difference. Freedom, kindness of people who reached out. Even there in Romania, everybody was afraid of everything. Because this is what totalitarianism is an insidious disease. You know, it's really strong people, cruel, inhumane, who protect the interests of minorities against the vast majority of the population. And that's what communism really was. It was not an ideology. That was nonsense. There was just the people in power who took it all, who lived well, who got the money, and they were determined and committed to just carry on for the next generation of communism and so forth and so on. And there was no freedom. There was no there was no public good. And here there was democracy, this thing, as I learned way back, the Greeks played around with that. But democracy was about people. That's what it means. It's of the people, by the people, for the people. And we in America have been blessed by geniuses, our forefathers, who believed in a few critical principles that I so embraced. When I learned about them, I said, my God, all men are created equal. These idealistic views of America meant so much to me. And I learned to believe and have faith that I'll be okay in this country.
It does strike me, coming to the United States in the 1950s, there was a time of almost unlimited opportunity, at least for some, as you say. The equality question had a lot of work to be done on it. But unlimited opportunity, and equality of opportunity at least was the goal.
That was the goal.
A lot of people saw it.
Yes.
Do we have that same level of opportunity and equality of opportunity today in the United States as you saw it in 1954?
You know, David, the magical thing is that, as you said, I got to live the American dream importantly because of the time. America, right after the war, was probably for the next 40 years was the best of America. Was the most selfless that America or a country could be, that ever was in the world. And then things began to change slowly. In the 80s or so, business became something else. Business was caring about workers and shareholders and communities and the customer a lot, 4 or 5 stakeholders. And then it all changed. It changed in the early 1980s, and the mantra became the leaders of business and government, the Reagan administration decided we're paying workers too much money. Why do we need that? Let's kill the unions, which they did. Now, unions had some problems, they had to be fixed, it became criminalized, and so forth. So they're not angels. But the idea was, let's take advantage of everything that we can and maximize short-term shareholder values. And let's make the few of us, again, was moving towards the rich people, we'll have our kids well educated and all the rest of it, the hell with the rest of the people. And 40 years of that, and America became the most unequal nation in the world economically, financial well-being. Today, 60% of American people say, I'm financially secure. I'm worried about my existence. In fact, 60% of American families can't put food on the tables or pay their rent most months. And they have to borrow money sometimes. And it's not at the bank, it's private people. It's very expensive. It's tough out there. We have become the most socially inept at their ability to move from one strata of society to the next compared to anybody else in the developed world. And even our education. We invented public education, and yet our kids today are at the bottom of the developed world. So that's what happened in 40 years, driven by business, and the governments did not do enough to fix the problem.
Well, and in some instances, the government may have exacerbated some of that for its own reasons. I mean, we've had a couple of major crises in this century with the great financial crisis in 2008, 2009. The government felt they had to come in and give support to the economy. And then we had the pandemic. Again, the government felt it had to come in. And again, there are reasons for that. At the same time, it did tend to enhance the wealthy and the people, particularly who owned capital, to the disadvantage of the people who did not have capital.
It's exactly right, because there's a fix here. And that's why I'm saying people don't understand that it was the business community that really helped drive this level of inequality in America. And it is business and capitalism that has to fix it. Capitalism is the right engine. Capitalism doesn't care who the beneficiary is, whether it's 20 or 30% of America or the vast majority of America. Capitalism works in China and India. It's a machine. It's having access to capital, access to resources, risk-taking ability. That's what capitalism. It's not an ethical machine. The only thing he knows is produces wealth and well-being. Now, who benefits from that is the governance. That's it. And we had the wrong version of it. Everything went to the shareholders by design, and it was kept that way. And now it's beginning to change because it has to.
Well, what about that beginning to change? Is it changing, and what is causing it to change?
Well, it has, you know, in many ways, I believe it really must change because, why am I saying that? The precursor of totalitarianism that I saw in Romania is a large enough minority of people who are undereducated. They don't have the confidence in the society will help them. They become desperate. They become anarchists. And now today, we're seeing lots of those folks who really don't believe that the current system will ever come to help them.
Do you have hope for your children, your grandchildren, that there can be a correction as you would see it without the need for that extreme dislocation like you had in Russia, as you had in Germany, as you had in Venezuela?
David, if you would have been cleaning sewers at the age of 10 or 11 and look at yourself today, you have to be an optimist. I am an optimist. There are many good people in this country. I have faith in the heart and soul and values of the people of America. We will maybe muddle through, but we will get through this. I'm positive of this. I see it in the business world. I see some of the best companies in the world today committed to multiple stakeholders, committed to the customer, committed to the workers, committed to the companies themselves to grow and prosper, which they haven't. We milked everything to throw money to the rich and to the capitalists of today who own most of the wealth in America. So I believe we can do that. I see it happening in today's world. Stakeholders, multiple stakeholder capitalism is not yet at a tipping point, but it's beginning to get close. And so I believe this can happen. And I believe the American people are now speaking out and saying, we're not happy here. Please fix it. Our governments, our politicians have got to pay attention to the problem. For 40 years, it was a dirty little secret that the vast majority of America are being oppressed, just as we did to the African Americans way back when. And so those things have got to be brought to the daylight, and I am convinced in my heart, and I'm beginning to see that, we're beginning to say, hey, we got to do something dramatically different now to fix the problem. We got to educate kids. How can America have among the least educated kids in the developed world? How can that be, this rich, wealthy country? How can we have the homeless sleeping on the streets? How can we have 60% of America who said, I can't put food on the table at the end of this month? That's not right. So I am optimistic. I see it beginning to happen right now, right here and now. I see many people of goodwill. And I don't want to disparage the wealthy, because the wealthy have always been and are plenty generous. But they alone cannot fix the problem, nor can the government. Business can and must lead the way. So I'm optimistic because I'm an ex-businessman. I've been on lots of public company boards, and I see the tide is beginning to turn. People get it, and I'm really optimistic about the future of America. Yes, I am.
Many thanks to Peter Georgescu, former head of Young and Rubicam. Coming up, if the United States has so many problems, why does everyone want to come here? That's next on Wall Street Week on Bloomberg. Finally, one more thought. Nearly 200 years ago, in his epic Democracy in America, Alexis de Tocqueville wrote that the position of Americans is quite exceptional, and it may be believed that no democratic people will ever be placed in a similar one. This week, the United States celebrated its 248th birthday, still trying to live up to that potential. Jane Hartley, the U.S. ambassador to the Court of St. James at her annual 4th of July celebration in central London this year, noted the irony in British elections being held on American Independence Day. If only King George III had included the colonies in elections back in 1776, things might have turned out very differently. These days, we have no shortage of politicians telling us that we're exceptional.
I've always believed that one of the greatest strengths of America, you're tired of hearing me say it, is our diversity.
We're going to make America great again. We're going to make it better than ever before. November 5th, remember, November 5th is the most important day in the history of our country.
But Independence Day is always a good time to take stock of how we're doing. Sure, there are some ways that the United States is different from much or all of the rest of the world, like, for example, in the constant barrage of TV ads for pricey prescription drugs, up to and including the latest craze of shots to help us all lose weight. And America certainly has distinguished itself by demonstrating every 4th of July ways to put on the weight we need to take off, like by holding contests to see how many hot dogs we can eat. Though this year, the perennial Coney Island favorite Joey Chestnut was disqualified by cheating on the traditional hot dog with a plant-based alternative. But there are other, more important ways in which the United States continues to lead, as in its having more developed, deeper capital markets than anywhere else.
Most of our capital markets and the attraction globally to invest in our economy is based on the rule of law, and it's based on the independence and the capability of our institutions, even with all of the political challenges that we have, to function in a way that can create certainty for employers, certainty for investors.
And having an economy that, at least for the time being, is the envy of the world, attracting investment like never before.
U.S. exceptionalism or U.S. dynamic investment is still going very, very strong. That's really for no reason except we have great innovation in the U.S., we have great technology, AI, and then, of course, rule of law when it comes to financial markets.
And there is one other way that the United States continues to be exceptional, one that sometimes may seem like a problem, but that actually signals a strength. Everyone wants to come here, sometimes against the law, providing a constant source of political conflict and burdens on our cities.
It looks like we have substantially increased immigration right now.
But much of the immigration recently has been entirely legal and has helped spur our economic growth while controlling wages.
Immigration is good, but a rational immigration policy would be better.
One of those who came to the United States to pursue his dreams was the late, great Peter Jennings, for many years anchor of ABC World News Tonight. Peter was proud of being a Canadian, and some questioned whether so much of America should be getting its news every night from a foreigner. Peter and I became quite close during our time working together at ABC News, including through his marathon anchoring of our 24-hour Millennium program, and then his nonstop 9/11 coverage. We shared the same birthday and each year would exchange gifts. One day, he came to my office with my gift that year and told me with tears in his eyes that he had just become a U.S. citizen. Peter never hesitated to question and even criticize his adopted country. He saw the ways in which we fell short, but he never lost sight of the potential for exceptionalism that de Tocqueville had seen. And he gave me my present that year, a pair of American flag cufflinks that I wear to this day. That does it for this episode of Wall Street Week. I'm David Weston. This is Bloomberg. See you next week.